All right, yo, what's good, P2P? This is going to be a quick daily review for the trade that we took here on NASDAQ, July the 29th, 2026, during the AM session. Today was pre-FOMC conditions. So I know a lot of y'all are not familiar with how to trade that. So I'm going to show you exactly what we did today and how you could have capitalized on the 86 model. Starting off with our daily chart, y'all can see that we have still been repricing lower below that June low that we took out earlier in the month. Once we went below this low, we needed to monitor the reaction that we got to that low because that is a monthly low. That's a lot of liquidity that has been built up below that low. However, when we got the rally higher after taking out the low on this Friday right here, we had a short-term rally only back up into this daily gap where we seen the high of the previous week form and we expanded towards the downside. This current week, we have been doing basically the same exact thing, reprice below this June low, short-term rally into this imbalance, sell off, lower. So because we are seeing a sustained move lower, our objective needs to be looking for these daily imbalances right here. Now, the reason why I'm choosing these specific daily imbalances is because this is the only open imbalance in this move higher. And this is also near the yearly open. And this is near a big figure number, being 26,000. So if we're looking at this parabolic run that we had from the beginning of April going into June, it was literally a very fast move higher, over 7,000 points in NASDAQ in a month and a half. That is unheard of. It's going to want to retrace back down at least to rebalance some of this move higher. Think of this as a big ass bullish imbalance. It was nothing but buyers, people that wanted to be a seller. They did not have a chance. So now the market is coming back into this level to not only give smart money a chance to buy at a discount, but also rebalance and take out some of the late buyers that were all throughout here. Now, this is something that I was mentioning a while back. If we look at this low to high, where is all of the price action? Where is all of the down close candles? They're in the upper half of this move, which is very interesting to me. And this is why I'm not surprised to see us reprice below all of these down close candles, because think about if you were not able to get long anywhere down here, well, you definitely were able to get long up here. This is where all of the pullbacks that allowed people to be able to enter in the markets was occurring. So the market is going back to those levels to take those buyers out. And we should be looking for these imbalances to be the next target on price, as long as we remain below this daily imbalance right here. So looking into the short term of what we needed to watch for today's price action, we had this wick right here from Monday. So Tuesday, we see that we had a down close candle. Wednesday, we open and we have this wick right here. So if we can grade this wick from the low of the wick to the closing price, divide that in half, we get the midpoint. Again, midpoint of anything is very important key levels. So midpoint of this wick is going to be the same thing as the midpoint of a gap. We open below it, we trade up, fail to hit the high end, and we slam lower down into previous day low. So just looking at this daily power 3, we can see that this wick is the key level that we need to monitor for price to continue to move lower. Going into our 15-minute chart, we had the previous day low down here, previous day high right here, and we opened midnight here. We had a small move lower below midnight, but most of the price action overnight going into the 9:30 session was above this midnight price level. So the same thing that we said in the previous review, we have a lack of time spent below the midnight opening. So this is going to want to make us want to come back to this level because it's not enough time spent down this level. In addition to that, we already know that the daily chart is screaming bearish. We're looking for lower prices. So previous daily lows should be our draws on liquidity. So we see a open, small Judas lower, rally higher, and look at where the high of the overnight session, or basically the London session, form. We stop right before a key level, meaning this market is basically weak. We're not even able to get up into the daily wick levels. We fail to reach it on the high end right here, and we fail to reach the midpoint. So once we cross outside of this level right here, with these two down close candles. Look at what happens when we return back up into the low end of the daily wick. Very nice rejection here. And then we see the market sell off down lower towards the midnight opening price, the low of the day, and previous daily low. One quick thing that I don't have shown or marked up on this chart is that we can see another real inversion fair value gap in action. Can you spot it? I'm gonna give you a few seconds. So this bullish gap right here was used to send us up into the high of the day, the high of the overnight session. And then we see the market reprice lower back below this bullish imbalance. So again, once we break through this low and this imbalance with a close, which we get here, any return back into this price range is going to look for premium sensitivity. We get it right there. Failed to do an immediate rebalance, so that's even better. And then we see the market reprice lower. So this was a very good 15-minute power three. If you want to go study that on a lower time frame, I think that was the 9. That might have been a 10 o'clock candle, actually. I think this is 10 o'clock. So the 10 a.m. 15-minute candle, go study that on a lower time frame. Here's our 5-minute chart. Again, we can see the same thing here. Small Judas swing below the midnight opening price, stopping before the previous daily low. So what is the market doing? It's engineering liquidity. Run up higher, same thing here. Imbalance, return to it, rally up higher, make the highs. Once we get through this imbalance right here, this is a real inversion fair value gap. Carry that over to the opposing end. We can see that this return into our 5-minute golden ticket also tapped into this real inversion fair value gap over here on the left side. So once we see that occur and we see all of the signatures that we need to see in price, failing to hit midpoint of the daily wick, displacing below the low end of the daily wick, coming back up into it, premium sensitivity, selling off, create our first 5-minute gap, respect that gap, respect the inversion fair value gap over here on the left. And then we see a drop off lower into our previous daily low and our 86 model low. Looking here at our indicator, the indicator was also pointing towards the lows. So this is also going to give you some more confluence in addition to whatever you may have as a daily bias or higher time frame bias. You would get some more added confluence because the indicator is also pointing towards the lows being the target. Here is me putting the bias in the chat. 86 model indicator says low today is to draw on liquidity. So trade with that bias in mind. So this at 937. This is how the chart was looking. And one thing that we can notice is that it was very mixed today. If you see this, which I probably got to zoom in, this is a 55% and this is 45%. So that's damn near 50-50. Yesterday, it was a lot more one-sided, so it was a lot more easier to trust that bias. Days like this, it might be a little harder. And why can we expect that it should have been a little harder anyways? Because we have FOMC later today. We ended up getting the sell-off down towards our 86 model low. And here is the 1 minute. This is what everybody loves to see. So 9:30, we open, small move lower, rally higher, taking out any people that is in a short, trailing their stop loss above these highs. We see the market slams lower. We create our first bearish gap. This is going to be our golden ticket. Why is this our golden ticket and not this bullish gap here? Because our bias is looking for the 86 model low. So we're going to wait for our first presented bearish gap to form. We want to see that bearish gap be respected and get an ATM out of that. And if we do see all of those signatures, that is our entry. That is what we're going to take down to the 86 model low. So we see this short-term rally back up into the gap, respected it, closed below the up-close candles here. So this is literally your ATM. You can get in on the close of this candle here, or you can get in on the tap of this candle right here. Either one, that was a good entry. That's honestly where I should have added. But personally, I just took the 5-minute ATM, which y'all might not be able to see, but it's this candle right here. So the 9:30 candle itself on the 5-minute was an ATM. Once we got to close through that level or any return back into it, that's a short. Obviously, we get the 1 minute entry here. So that was another opportunity to short. And then we took it down into the midnight open because this is a pre FOMC day. You don't want to demand it to go all the way down to the 86 or even all the way down to the previous day low if you have objectives that you can aim for before that. So midnight was a very good level to aim for before it hits those levels, just in case the market wanted to be on foolery. We see it tap that level, so that was basically my exit. However, we got our first 5 minute gap, return into that level, and then we got up close candles getting closed below again. So this could have been your entry on this down close candle here, or you could have got the tap back into it right there and right there. And then we sell off down into our 86 model lows and the previous day low to complete the AM session. So today was very, very textbook, very, very easy bearish delivery down to our 86 model low. What y'all need to understand is that the bias is the main thing that is going to be the hard part for y'all to get. But once you have the bias, once you understand where the market is going to go, the entries are easy. Know what key levels to use, and I'm giving y'all the key levels right here. You didn't have to use this daily level. Even if you didn't have that, if you just understand what the golden ticket is, the 1 minute golden ticket, that was more than enough. You got an ATM out of that. Let's just say you don't like the 1 minute. You had a 5 minute golden ticket right here, and then you had a 1 minute ATM right out of that 5 minute gap down to the lows. Literally textbook perfect delivery. And this is also occurring at what time? During our macro. So that's going to be it for today's review. I will be chatting with y'all later to see what FOMC does. Hopefully we don't get no bullshit delivery because this honestly was very textbook, very good, easy delivery. And usually whenever they give easy delivery in an AM session, FOMC is ass. When they give ass delivery in the AM session, FOMC is good. So hopefully we'll just see what we get. But that's going to be it. If you got any questions, just let me know and I will get back to you.